Good morning, everyone, and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges facing the British government, the economy, financial services, and markets. I'm Francine Lacqua here in London. Now, on the show this week, the biggest industrial action by the public sector in years. 100,000 civil servants plan to strike next month over wages and inflation, ramping up the pressure on the Prime Minister, Rishi Sunak. Also on the show, retailers are less positive about the year ahead, despite some seeing a sales boost from the Christmas period. We'll break down the latest results. Plus, the EMEA president of software group Sage tells us how small and medium-sized companies will help drive the economic recovery in the UK and what the government can actually do to help. So the strikes roll on. 100,000 UK civil servants plan to walk out next month, adding to existing disputes in healthcare, on the railways and elsewhere. The action comes as the government plans new laws to limit disruption from future strikes. Now, for more on all of this, we're joined by our Bloomberg senior reporter for international affairs, Mark Champion, and our Bloomberg senior reporter on UK wealth, John Stepik. So, John and Mark, thank you both for joining us. John, first of all, when you look at the economic impact of the strikes, like how bad are they?
I mean, in terms of the overall GDP impact, it's actually quite small. That's partly because what happens is whenever a strike happens, economic activity is actually displaced rather than ditched. So, like, if you can't get to work on the train, you spend your money, in your local cafe at home. So that's relatively minor. I mean, obviously, if you're somebody who needs an ambulance on the day the ambulance workers are on the strike, that's a completely separate issue. But in terms of actual economic impact, it's more the strikes are more a symptom of our wider economic problems. So they're happening because inflation is going up rather than the other way around. Obviously, what government and central banks worry about is that then that starts to feed off itself. So inflation creates strike action creates higher wages, and so on. At the moment, it's hard to argue we're seeing a wage price spiral, though, I think.
But you could, and this is kind of like a feedback loop. And I guess, politically, for Rishi Sunak, he hasn't been in charge for that long. He's dealing with a number of issues, but this could be very, very dangerous for him.
It's really bad for him. I mean, he was in a difficult position anyway. This is 13 years into Conservative government. They've had a lot of trouble. That he replaced a kind of crash and burn effort at an administration, and here he is, having to deal with really rolling strikes that are becoming wider. And you could argue that he may have misjudged. Back in early December, when it became clear that the NHS in particular was going to go on strike. There's a huge amount of sympathy with the NHS, especially after COVID. People know that the nurses and so on are underpaid, they're understaffed, in part because of Brexit, which was also conducted by the government. So, it really is a pretty nasty cocktail.
And Mark, I guess I don't know whether the public is behind at all. These anti-strike legislation could be really damaging, right? So it's basically assuring a minimum service, no matter what happens.
Yeah, it's sort of a high-risk strategy, and it follows on from that decision early in December to sort of take a tough line. You could argue, because the polls suggest that, in particular to do with the NHS, but more widely, the public supports the unions, not the government. So this may be, it may prove to be rather tin-eared.
Yeah, so John, are we going to see an increase in a lot of these salaries? And again, is there a concern that actually inflation, a lot of people, and I think the public is fairly behind a lot of the NHS workers saying nurses absolutely need a bigger salary, but that you increase that salary by 10, 12, 15%, and then inflation comes down?
Well, I suppose what I would say is I don't think it's necessarily about exactly whether the nurses get a pay rise or not. I mean, to my mind, the issue with the strikes is partly political, and it's also being driven by the cost of living going up. If the wider cost of living if the increases in the cost of living start to slow this year, as seems likely, then some of the impetus behind continuing strike action might be taken away. The problem at the moment, I feel, is that the unions have got the bit between their teeth. They can smell the blood of as you say, a kind of like 13-year-old Conservative government. And it's going to take quite a lot of, I think, probably maybe the government backing down a bit in some of these things for it to take any of the heat out of the debate. And we're not seeing that happen at the moment.
John, overall, is the economy in the UK improving? I mean, we've had such bad figures that I don't know how much lower we could go from here.
Well, I mean, the thing is, it's, when you look at the corporate results since Christmas, the trading updates have all been much, much better than you would have expected if you'd been, just reading the headlines before Christmas. I mean, Next, Tesco, Marks and Spencer, Sainsbury's, Premier Inn, Owner, Whitbread, they've all come out with either solid or actually strong results. So it does appear that the consumer is still spending, and ultimately the UK is a consumer-driven economy. And as long as the consumer doesn't go on strike, then the wider economy itself is probably going to be okay. I mean, we're probably maybe in a technical recession just now, and and that's 2 quarters of GDP not growing. But at the same time, I think it might end up being milder than a lot of people expect, and I think that the headlines and also the overall kind of toxic politics that we've had for the past year are sort of creating an impression of the UK that I think probably isn't actually necessarily borne out by the underlying either economic performance or investment performance of companies in general.
Yeah, and actually the earnings, you're right. I mean, we had M&S and another one, and sales are okay, but they've had to really fight for their margins. So they're trying to keep that shopper loyal because they may switch to cheaper brands.
Oh, absolutely. Right? I mean, you're right. But the thing is, if you were sort of reading the headlines about strike action and the kind of trains going on strike and snowstorms and all the rest of it in December, you would have expected, I think people were thinking, well, somebody's going to come out with a whopper of a profit warning.
Yes.
And as it turns out, we have had profit warnings, but they've been from Direct Line, which is completely different reasons, and also Halfords this morning. But Halfords, again, is kind of specific to that company rather than a result of the wider economy.
And Mark, the number of calls I've gotten from French friends or French journalists and Italians saying, what is going on in the UK? You're becoming so French because of the strikes. Have we really seen anything at this scale in the UK before in terms of people taking to the streets to show how unhappy they are?
Not for a really long time. And people sort of, they look back to the winter of discontent, which was, back in the late 70s. But it was, if anything, I think some of the wrong lessons are being drawn. Some of the same things are happening. High inflation, the government worried about stoking that and therefore, going to bat with the unions. But it was a Labour government. Margaret Thatcher followed. And also, the UK was sort of coming out of, it had just gone to the IMF for money. It was basically bankrupt. As tough as people feel this is, we're not quite in the same position, as John was saying.
We also, so the London mayor, is warning today that Brexit has done immense damage to the city. I know, John, you pushed back against this a couple of weeks ago. I mean, is the narrative shifting actually to we need to minimize Brexit, or is this a red herring?
I think it's a red herring. I think it's a very useful stick to beat the government with because obviously, the government has and is heavily identified with Brexit. And obviously the Tory party is massively divided on that front. So it's very useful kind of thing to hit the government with. I do think there's probably also an element of trying to kind of bring Brexit back to the forefront of the political arguments now that COVID is starting to go into the distance again. And obviously Sadiq Khan's a kind of high-profile Remainer. So as Mandy Rice-Davies sort of said, he would say that, wouldn't he? So, I don't think... red herring.
All right, there you go. John Stepik on Brexit and, of course, our London mayor. Mark, thank you so much. Mark Champion and John Stepik will be back in a couple of weeks joining us this morning on the UK. Coming up, small and medium enterprises will lead the recovery in the UK economy, but they need more government support to do so. That's Sage EMEA President Derk Bleeker and what he believes. So we speak to him next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, just a reminder, we're keeping an eye on all things markets. Yen extending gains to 1%. This is, as there's a lot of speculation from BOJ, and of course, a policy that does this comes from traders, gaining to 1% amid some of the speculation. Again, remember, we've had a really big news stories from the Bank of Japan over in December, and then we also have Governor Kuroda stepping down in April. There's speculation about who will, of course, come after him, and traders really piling on bets about another hawkish pivot from the Bank of Japan following this report that the central bank will now review the side effects of its policy as soon as next week. We've also had a string of UK retailers reporting this morning, which benefited from a Christmas boost, including Tesco and M&S. The outlook for the year, though, is less optimistic. We'll dig into the numbers now with our Katie Linsell, our UK retail reporter. So, Katie, talk us through some of these retail earnings. What are you seeing?
Yes, good morning, Francine. So the key ones to look at today are Tesco and Marks & Spencer. Both retailers showed that sales rose quite significantly in the Christmas period, but both are saying that they expect their profit outlook to be held. They are not upgrading. They do not expect better than they had previously told the market. And in both cases, they've seen shares fall slightly this morning as investors had hoped for better. So it shows that really their margins are continuing to be squeezed by the cost of living crisis. They're doing everything they can to try and keep prices low, that they say, for consumers. But it really shows that that's eating into their margins. Another interesting retailer to look at is ASOS, the fast fashion online retailer. ASOS has been having a very tough time. Their sales actually fell in the period, and they are guiding that they're going to be loss-making in the first half. But despite that, their shares are actually up because they are telling investors that their turnaround is making progress, and they are hopeful that they can see some signs of profitability ahead.
All right, Katie, thanks so much. Katie Linsell there, our UK retail reporter with the very latest earnings. Now, the UK increasingly facing a perfect storm as the economy grapples with the cost of living crisis, rising industrial action, and political inertia. Now, a report by Sage Group, the FTSE 100 provider of financial and HR services to small and medium-sized businesses, sees SMBs as key drivers for the UK's economic recovery. The report, though, says they need more government support. So for more on this, we're joined by Derk Bleeker. He's EMEA president at Sage. Thank you for joining us. There's so much actually going on in the UK and such bad news out there. Can it only get better from here? What are you seeing among small and medium-sized enterprises?
Well, first of all, thank you for having me. I think obviously, there's no denying the UK is in a difficult place right now. Yeah. But we do see a lot of optimism and a lot of reasons for optimism. And as the report tries to point out, if we look at the drivers of economic recovery from, for example, the great financial crisis, small and mid-sized businesses are key to doing that.
Yeah, absolutely. And Derk, one of the things that we've been trying to figure out is actually leverage. And I'm surprised, and I don't know whether this comes in the second half of this year, that not more small companies, medium companies want bust because interest rates have gone up by so much.
I think it's a good question. A lot of that has to do with the adaptability, ultimately, and resilience of small businesses. They can make fast decisions, pivot quickly, innovate quickly, which gets them out of, obviously, then means that they're driving revenue growth, and it gets them out of any financial issues. But financial access is absolutely a key driver to making sure that small businesses can support the economy going forward. So
you don't think there's zombie companies that are going to go bust in the second half of the year? There's not a doomsday scenario for smaller companies where financing and where they were over leveraged?
We don't see a doomsday scenario at the moment. Speaking to our customers, they're trying to work their way through what is a difficult time, but they're doing that by innovating and trying to grow their business.
So where do you see the biggest growth actually for small and medium-sized companies in the UK? I know if you're a retailer, you've been hit quite hard, certainly in the beginning because of Brexit and some of the tariffs going to and fro for Europe. Is this stabilizing?
So if you look at the report again, points to the professional, scientific and technology sector as a key driver, both in the great financial crisis and an expected key driver of economic growth from SMBs going forward.
So where do you see, if you look at the next 12 months, I know we've had such bad news and you're pretty optimistic about the future. Is this just one of trying to, I guess, keep your margins, keep your customers loyal, and then you increase next year? Like, what kind of timeline do you see over the next 2 to 3 years for growth?
Well, look, as a company, Sage itself, we see, we continue to have a good growth momentum, as you saw in our previous year's financial results. And we are a very resilient business, right? We believe in the SMB economy. The SMB economy is proving us right, has proven us right to date over many years. So we continue to see strong resilience.
And are you getting enough support from the government? Are small businesses, medium businesses, and tech businesses in general here in the spotlight of the current government?
I think there's a lot that politicians across both parties are trying to do, but there is a lot more that we can do. And we really, at Sage, we believe in the digitization of the economy, and government has a pivotal role in trying to digitize the economy further. Supporting small businesses to adopt digital technology is a key part of that.
I mean, are you frustrated? It feels like it's been slow. I feel like we've been talking about digitization and more technology for the last 4 to 5 years.
We have, but if you look at the pace of digital technology adoption, especially through COVID, it's accelerated immensely. So I wouldn't say that we're frustrated. I think there's just so much more opportunity. We did a report last year that pointed out there's a £230 billion revenue opportunity for small business just from higher digital technology adoption.
Derk, thank you so much. Derk Bleeker, their EMEA president at Sage. He stays with us. Now we'll have plenty more, of course, on Bloomberg UK. Coming up, ditching office space. We take a look at how the tech downturn has impacted commercial real estate next. This is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, Alphabet, Meta, and software giant Salesforce are among the latest U.S. tech firms looking to ditch their leased office space in London. That's as the cooling economy brings the sector's years of rapid expansion to a halt. But it's not a London-only phenomenon. We look at what's behind the retreat.
Following years of rapid expansion, the global tech sector took a monumental hit in 2022. Crashing stock prices, surging interest rates, and an ever-darkening economic outlook forced big tech firms to cut costs. And after slashing jobs at a pace like the early days of the pandemic, FANGs have started offloading office space too. Meta, Alphabet, and software giant Salesforce are among global tech groups ditching offices in London as they downsize European operations. Just over a year ago, these were the very same companies sparing no expense in renovating their shiny buildings in the British capital. Google spent $1 billion on its central St Giles's complex and built a new campus in King's Cross, equipped with swimming pools, gyms and massage rooms. Facebook followed suit with a new 40,000 square metre space to house over 6,000 UK employees. Last quarter, parent Meta estimated charges related to global office facilities would hit $2 billion this year. So what happened? Certainly the market crash killed some of London's appeal. At one point in November, the UK even lost its crown as Europe's biggest stock market to Paris. But the challenge is global, with offices in tech hubs such as Dublin and even San Francisco being emptied following massive layoffs. Bloomberg has logged some 81,000 job cuts in tech over the past year, with Amazon and Salesforce announcing more than 25,000 last week alone. But it isn't all gloom in London. TikTok was said to be in talks late last year to lease new space close to its current UK headquarters. So is the social media sensation the only company still able to dance its way through the big tech downturn?
TikTok. A lot of us have an account. A lot of us don't use it. Maybe we should look at what's driving big tech's retreat from commercial real estate. So we're back with Derk Bleeker, EMEA president at Sage. Derk, when you look at commercial real estate, I mean, is it something that it's affected? Has the trend affected Sage?
It's not affected Sage, and we're still in our offices and not seeing these kind of trends. I do, we have to take these things into perspective, right? Big tech obviously likes to invest to grow, and occasionally that means they have to pull back a bit. But you know what? It also shows why we have to make sure that we rely on small and mid-sized businesses to drive the next wave of growth to come out of this economy, because they're going to lead it.
Yeah. But if you look at small and medium-sized enterprises, I guess the biggest challenge is pacing their staff enough, right? And the cost of living crisis, I don't know whether it's staff retention, it's finding the right staff because of the skills shortage, and paying them.
It is, especially skills and finding the right staff we hear that across, mid-sized businesses, small business, and big businesses, that's not gone away. Even in these times, it's a structural problem that we need to solve all the way to ground up from the education system.
So that takes years to fix. Is there? I mean, are you finding? Is it a struggle to find staff?
So we're very lucky in that we have a global headquarter in Newcastle, which is a fantastic place to find amazing talent. And that has kept us going for a lot of years in trying to find fantastic staff. And we invest a lot in making sure we both work with schools in the area to bring STEM skills, take apprentices, and then make sure that we invest in our people in Newcastle and, of course, across the world to make sure they have the right skills to do their jobs.
I mean, there has been this, north-south divide, or London and everything else in the UK divide, and previous governments have really promised to try and, bridge that gap to bring them closer. Has that worked?
I think there's a lot more to do, if I'm honest. If you look across the country, obviously, there is still a big disparity in London and the rest of the country. But we strongly believe that the north-south divide has no real reason to exist. If we look at our presence in the northeast, again, you can find the talent, you can find the people, and it's a fantastic place to be a global company.
All right, Derk, thank you so much for joining us. Derk Bleeker, their EMEA president at Sage. Now, be sure also to subscribe to Bloomberg's In the City podcast that I host alongside David Merritt on Apple Podcasts, Spotify, or wherever you get your podcasts. Actually, this week we focus on banker bonuses and the fact that a lot of them will get a donut. I had to Google what that meant. It's a big fat zero. So it's a focus on bonuses and, of course, some of the staff being laid off at some of the big banks. Bloomberg Surveillance Early Edition is next with Matt Miller, Kaylee Lyons in New York, and Anne Edwards in London. The big story of the day, apart from these strikes in the UK and focus on GDP in the UK, is, of course, stocks in Europe are gaining ahead of that CPI data print in the US. What does that mean if we have a US inflation print cooling? Does it reduce pressure for aggressive rate hikes from the Fed? This is Bloomberg.